Episode 3 of Spooky Finance 2020. Getting into October theme of scary money, scary finance. My name is Steven Vanderhook. We're going to jump into today to talk about some really interesting frauds that have happened over the year. And we're not talking about your email phishing scams or someone who's calling you about your auto warranty that doesn't exist. We're talking about big corporate fraud and how that actually can play a factor in our investment portfolios and in our investment strategies. Fraud case number 1. We're going to talk about the classic salad oil case. Now, this is back in the 60s. A boy from Jersey, Tino from Jersey was the guy who was involved with this. He had this company. He had been involved in some fishy issues in his past before this company about dealing with school lunches and like bad meat sources, weird criminal history. Anyway, this new case, what he's doing, essentially he's taking a whole bunch of salad oil, soybean oil, and posting it as collateral to banks for loans, right? And so what he's doing is he's using accounting fraud to say that he has much more of an asset, salad oil, that he actually does. And imagine, you think of collateral, you think of like autos, real estate. Imagine being a bank officer and be like, yeah, all right, well, if you don't pay your loan, we're going to capture all of your salad oil from you. But that was the case. That's what they did. But the reality is this guy had like no salad oil. So in total, he posted 1.8 billion pounds of salad oil as collateral, but in reality, he only had like 110 million pounds. So not even close to the amount that he posted. And so he said he has all this. Well, you got to ask, how would they do this, right? If a bank is going to give you millions of dollars worth of a loan, and it was, there was a ton of losses. This is millions of dollars back in the 60s, right? So this is the equivalent of like hundreds of millions today. How would they not check? And they did. He had this big old ship and this big port and these big old drums, these huge, massive drums, right? Think of like a cargo shipping dock, right? Huge drums saying all of these were full of salad oil. And the reality is these huge drums were full of water almost all the way. And then at the very top, the top, 5 feet of these drums, again, these are massive drums, right? They're huge. The top 5 feet was salad oil. So then when they went to audit, they'll open the canister, they'll open these huge drums that are on these giant ships and these cargo docks, and they'll put a big old ladle down, but oil floats to the top, so it just sat on top of water. So they got a bunch of nothing, and then a little bit of an asset up top, right? And so they dip a ladle down, they pull it out, and say, yeah, this is good oil, smells good, this is good stuff, let's take it, let's post this collateral, and we'll give you this huge loan. And then what's even crazier is they had multiples of these drums. They tested some in the morning, and then they entertained them with a nice, extravagant lunch. And so while they were eating lunch, they had people who were moving the oil of those top few feet of oil from some drums to the other drums. So then in the afternoon, they go and check the other drums, and those ones have, not only do they only have a little bit of oil in them and mostly water, it's the same oil that they had already checked in the other one. Super weird case, super interesting. But in total, $180 million of losses. That was 60 years ago. Oh my gosh, almost 60 years ago. Wow, 60s do not seem like that long ago. Not that I remember them or was alive during that, but just doesn't sound like 60 years. Anyway, that's like $1.5 billion of losses today that some guy just pulled over, on a bunch of drums. But who was the people who were taking these losses? That's the interesting part. It was American Express, Bank of America, Bank of Lumi. I don't know how to pronounce that. Lumi, whatever. These are big companies that were falling for this, right? And they probably outsourced some of the auditing and things. So there were a lot of people. This wasn't like a small time transaction that you pulled over on your local townsfolk, right? These are people who are in the business world. These are people who are from New York, from Jersey. They're skeptical, right? They're street smart. They want to make sure they're not getting, and they still got totally scammed, $1.5 billion of losses. And the guy couldn't repay his loans because of his shady business. The collateral was useless. There was no collateral. It was all water, right? There was no collateral on these loans. Big companies got fooled. So if they got fooled, you got to recognize you can get fooled too. Fraud case number 2, Enron. All right, Enron is just a complete disaster. If you've never watched The Smartest Guys in the Room, super interesting documentary, highly recommend it. It's really, really interesting if you want to dive deeper into Enron because it's extremely confusing. So in short, Enron is an energy company, right? And they're huge. They're a really, really big company, and they got involved in a lot of weird stuff that, they were involved with, like California retirement or pension funds and things like that. They were involved with like deregulating energy in California and a lot of stuff. But the big thing they did was they hid a lot of their debt. And so, there's special purpose entities, SPEs, basically these companies that you can offload debt onto, and then they were posting the equity of their own equity of Enron with it. So essentially, they were just doing fraudulent accounting to hide a whole bunch of debt. So they look way more profitable because with that debt comes expenses, right? So, all the interest expenses and fee expenses, all of that is hidden on another company off their balance sheet. And so Enron itself looks very healthy and very profitable. They did this with hundreds of companies, and they did it for years, hundreds of these SPEs. They did it for a long time. So this wasn't just like a one-time thing where they hid some debt. They were doing this repeatedly. They even had one SPE that it was an acronym called JEDI. I mean, it just seemed like they were so confident in it and so cocky in their ways. They were even trolling people and doing JEDI and Chuco and weird companies that they were doing for these SPEs. So you got to think, okay, this is a huge company. They're worth billions of dollars. Everyone knows who Enron is. They have thousands of employees, international work, international company. How do they get away with this? Aren't there people who check this? Yes. It's called auditors, right? And if you're a publicly traded company, you're required and legally required to have yourself audited by a third-party company. Ever heard of Arthur Andersen, big accounting firm? No, you haven't, because they're gone, right? There used to be the big 5 accounting firms, big 8 back in the day, big 6, big 5, acquisitions, mergers, whatever. But the reason we now have the big 4 is because Arthur Andersen no longer exists, right? Back in 2000, they were their auditors. That was a big accounting firm. Every year, millions of dollars spent from Enron to Arthur Andersen to pay them to audit their books, so they can prove to everyone they're doing things that are legal. Professional auditors, professional accountants. Now, whether people saw shady stuff with these SPEs and turned a blind eye, maybe they were bribed. Some of it, though, just got through the cracks. When there's hundreds of companies, they just didn't see it all. They couldn't fully understand all that was going on with their complex accounting, these accounting loopholes. I mean, and at the end of the day, $63 billion company, bankrupt, right? This was 20 years ago now. At the time, it was the world's largest bankruptcy ever, or at least the nation's largest bankruptcy, until WorldCom the following year. So it didn't last, their record didn't last very long. But, I mean, again, big company, down the tubes. Now, interesting side note, I used to work with a guy, we volunteered in the same church back in college. He was in his 40s, maybe 50. He was retired, multimillionaire. He spent all his time volunteering, and he hunted like 30 hours a week at least, and then he was a defensive coordinator for the local football team. So just a super interesting guy, super cool, really good, really fun to work with. And I asked him, I was like, so how'd you make your money? How are you well retired in your 40s as a multimillionaire? He's like, oh, well, in the late 90s, we had started an energy company, and then Enron went under. So, the market was just there for the taking. Super crazy, right? So all of a sudden there's a huge vacuum, no one's supplying energy, so all the other competitors could just jump in and capture all that market as fast as they could handle it. So interesting side note about Enron and how one guy benefited from it. But most people, they were destroyed, right? Retirements went to nothing. Their stock went from over $90 a share down to less than $1 a share in just over a year, like 15 months. Imagine that. And some people, they came in, they said, all right, was it 90? Now it's at 80. Now I'll buy in. Right? I mean, there were so many people affected by this. People who were analyzing their stock. A lot of people had their retirement and their pensions all tied up in company equity. Big risk. And now they don't have any retirement. And some of these people are just energy workers, right? They're people who are out there working on power lines, right? Hard-working people. And there were a ton of teachers, right? Again, there were people who, in their pension funds were invested in Enron stock. So there were so many people who just didn't have any retirement now. I mean, thousands of people were destroyed by this due to the greed and fraud of a few people up top. It was just awful. They had horrible sales incentives and just awful things to keep all this heightened. Horrible culture, awful company to work for, in my opinion. But, at least at the office level, the corporate level. But imagine going in and saying, hey, you know what, their stock is tanking, but I'm going to buy in at 80. I'm going to buy in at 70. I'm going to catch that falling knife and buy in at 50. It was worth 90. I'll buy it at 50. It'll bounce back to 90, surely. It never did. It just evaporated to nothing, and then they went bankrupt. They couldn't even sell it. They tried to sell. Someone came in and tried to buy it, what was left of Enron, for pennies on the dollar, and they couldn't do it, and they just went totally bankrupt. Fraud case number 3, the classic Bernie Madoff, right? The biggest Ponzi scheme ever. This guy, he took in millions of dollars, eventually tens of billions of dollars that he took in over the course of decades, and people were just giving him money, and he was just putting it in an account, and then whenever they wanted their withdrawals, he would just give them part of their own money back, right? That's a Ponzi scheme. There's no real investments, there's no real business. You're just saying, hey, I'm going to have you give me $10, and I'm going to have 12 other people give me $10. Sweet. Now I have $130. And when you want your 10% return, your 20% return, well, I can give that to you because I have other people. So if it's a growing pie, you can always take part of the pie to give back, but there's no real investment going on. And he had fraudulent trades. I mean, he would just say, oh yeah, I do these stock trading. That's what I do. I do stock trading all the time. I'm really good at investing, and you give me money, I'll go invest it. I'll give it back to you. The reality is he wasn't investing in it. He was just, and he would post statements and be like, hey, here's your return for the year. I got you a 20% return. You're welcome. I'm awesome at my job. Here are all the trades that I did. Totally bogus trades. They would just go in, look up what trades would have made those numbers, right? And then, oh, hey, we bought at 5 and we sold at 10. And we did that for $1 million. So we spent $1 million, $5, we turned that into $2 million. They just would backdate these, right? They would just look at history, see what trades happened, and then say that they participated in those. They would just pretend that they did those. That's what Bernie Madoff did, and he lost tens of billions of dollars. Now, people in the early days, some people they knew. Some people saw this, a decade before he was ever arrested. They saw this and they were like, hey, there's no way he could do this for a number of reasons. One, no one's that good at trading. And 2, the volume that he would have to do, and he had some more complex stuff. There were some put options and whatnot. A lot of stuff he was doing. He would look at that and say, hey, just simply the volume of that activity can't be done, right? Like, in order to get those returns with his strategies, there isn't enough out there, right? There's not enough Chevron stock for him to buy at that price and then sell at a different price to actually make any money. So there's just no way he can be doing that. Him buying that much volume would make the price move. Just his own activity would cause price movement, right? If he's doing that much volume. So some people knew ahead of time, and I think some people, they knew and they just didn't care. Or they suspected, but they saw their returns and they were involved with it and said, hey, this could be a Ponzi scheme, but I invested $10 million with this guy and I've already got 12 million back. So even if I lose everything tomorrow, I'll still have made $2 million. I'm just going to let it ride. There had to be some people involved in that, that they deep down knew. They had to think this is too good to be true, but I'm going to ride it anyway, right? They let that greed capture them. But then there were a lot of people who don't get their investment back, right? And tens of billions of dollars are lost due to this huge Ponzi scheme because, you invest with him and you give him $1 million, and over the course of a few years, he gives you a few $100,000 in return, and then it all disappears because there's nothing actually happening, and then you lost your other $700,000, right? I mean, that's what happens with these scams. Okay, so we have a few different examples here. We talked about some interesting, really niche fraud that affected the banks. We talked about bigger fraud that affected thousands and thousands of people with their own retirement funds and pension funds. And then we also talked about, very specifically, one guy who had this huge Ponzi scheme. Well, the theme here is that so many people got tricked. Whether you're a skeptical banker from Jersey, raised with street smarts, and you don't believe anyone unless you see it, and you went in, you tested that salad oil, and you even ate some of it, you put it on your salad for lunch and you ate it, you still got tricked, right? People who were deeply involved with Enron, people who were the auditors, who all of a sudden this huge accounting firm was just gone because they were auditing, people who had nothing to do with it, who didn't even know what Enron was, but had their retirement tied up with this company and their stocks, destroyed. Right, lost everything. And then you have people who are directly involved with having a private fund manager, right, a private investment manager who then can lose everything too. So there's no matter who you are, you can be affected by these big frauds. Even if you personally don't even know it, right? There were people who didn't even know what Enron was. They didn't know where their retirement was. They just knew they had a pension plan, they had a retirement plan, and it turned out it was involved all in this one, really, really heavily invested in this one stock. And that's the big concern here, right? Is not being diversified and having too much of your own investments tied up into one case. So a big takeaway from this and why money and investing can be scary is because you can get tricked no matter who you are, right? And when someone asks you, have you ever been a victim of fraud? There's only two real answers. You can say yes, or you can say, I don't know, right? You can't actually say no, because sometimes you just don't know that you're a victim of fraud, right? That's a good scam never reveals itself, and people don't understand it. You don't know, and you can get scammed. But how do you protect yourself from that? Because I'm not saying, oh, this is scary stuff, stay out of the markets. You got to invest. If you want to get wealthy, the only real way to do it for most people, it's not through earning, it's through saving and investing and using time, right? Some people, you're in the entertainment industry, sweet, you can make millions a year. Most people, they're just going to sock away a few $1,000 every month, whatever they can do, and over time they'll get rich, right? You got to invest. I'm not saying stay with markets. I am saying be wise, right? You can't just have all of your eggs in one basket. You have to diversify, no matter how confident you are on that stock. There were day traders, right, in the early 2000s who did all their analysis, they did all their due diligence, they knew so much about Enron, and they went heavy, and they bet big, and they put 30%, 40% of their company in, and they said, hey, I bought this at $40, it's ridden all the way to 90, it's going to keep going, it's going to go to 200, and it went down to nothing, and they just lost it. Right? There were people who bet heavy on these individual companies, and that's what some people are doing today, right? They're betting in, they're not diversifying, and diversifying across 5 companies, that's not real diversification, right? Especially if they're all in stocks, they're not even diversifying across asset classes. So when all of the stock market takes a hit, that's not real diversification, right? They have to be uncorrelated categories of investment that aren't going to be affected by the same events. We don't know who the biggest Enron and WorldCom is, right? Companies that are going to go bankrupt, whether that's through poor management, whether it's, Kodak, who just fell behind the times, Blockbuster, right? Who never went and got online and got real delivery service. They fell behind the times, or it's Enron, and it's just amazing fraud. I don't know which companies won't be here in 5 years. But there are huge, massive companies that will no longer be here. Companies that are in the S&P 500 10 years from now, gone. Some of them won't exist anymore. Which ones? I don't know, and neither do you. And that's the point. There's no way to know, again, whether that's through poor management, whether that's through lack of innovation, or whether that's through fraud, it's out there, right? There's a company right now that is big and everyone knows them and everyone's singing their names and everyone's saying this is the hot stock and there's articles being written about them and blogs and videos, but it's a huge fraud. And no one knows it right now. But 5 years from now, we're going to know about this. It's going to be the next big case. There's going to be tons of news about it. And everyone will say, oh, of course, looking back, how could we not have seen this? Hindsight's 2020, blah, blah, blah. We don't know which it is, but there is an Enron right now. Right? One of these companies that everyone knows of and everyone sings praises for, it's fraud. We just don't know which one. Now, to wrap all this up, we got to remember the mind shift that we need to have, right? The paradigm shift that we need to have. If you're just trying to get rich, that's what's going to make you fall into these traps. That's what's going to make you try to get into day trading and not realize that you're in a way over your head. Or try to pick individual stocks without doing real due diligence. I mean due diligence, weeks, months of energy and effort and research, right? And then knowing when to walk away and when to abandon and say, hey, I learned all this so I can say no, right? If you're not willing to do all that, you're because your goal is to just make money, that's the wrong mindset to have, right? That's the Chad mindset. Chad's saying, hey, how can I make all this money? How can I get rich? How can I look cool? How can I be just flashing my Lambo in 5 years from now? That's not the right mindset to have. I'm not saying you can't get rich quickly. That's possible through hard work and whatnot, but it's rare. And if you're just trying to get rich quickly, that mindset and that greed, that's going to make you succumb to riskier and riskier tactics and attempts to get wealthy. And that's the problem. What does Warren Buffett say, right? The Oracle of Omaha. Does he say get rich? Is that his rule for investing? No. What's his one rule? Never lose any money. What's rule number 2? Never forget rule number 1, right? That's it. he knows. He has that paradigm shift. It's not about how you can make money and how much money you can make and how quickly you can make it. It's about how do you not lose money in investing. That's the key. Anyone can make money, but very few people can not lose money. That's the real skill. And if you're involved in this mindset of quick results, and I need it now, and I want my McDonald's right now, and I don't want to wait for it, I just want things immediately, and I want that immediate gratification. Here comes Grandpa Steve out here saying, hey, you kids out here, you want things too quickly. You need to be patient. It's true. You guys need to be patient. We all need to be patient. Recognize the road to wealth is a long journey. It's a fun journey. It's exciting. There's ups and downs, but it doesn't all have to be terrifying, but it's a journey. And if you're trying to go too quickly, you're going to get lost, and you're going to fall victim of potential fraud or potential just downturns and unnecessary risk. So that's the message for today. With all this, these fun stories of fraud, they're interesting, they're unique, they're really interesting to study, but the takeaway is, hey, one, you have to diversify. And two, you just don't know what's out there, and so you do have to make sure that you do focus on the downside. You have to make sure you're protecting the downside. You're saying, hey, I'm going to make money, but more importantly, I'm going to not lose money. And rule number 2, I'm not going to forget rule number 1. I'm still not going to lose money. Hope you enjoyed today's video. We're wrapping up Spooky Finance. We got one more in the month for us, but let's focus on today's quote. I love this one. One of my favorite lyrics. In my rise, I will not falter. In my rise, I will never stop. Constantly pushing myself beyond unrest. Let's go get after it, guys. Take care.